This episode is brought to you by Kraken. Crypto is like finance, but different. It doesn't care when you invest, trade, or save. Do it on weekends, or at 5 a.m., or on Christmas Day. At 5 a.m., crypto is finance for everyone, everywhere, all the time. Visit kraken.com/see-what-crypto-can-be to learn more. Don't invest unless you're prepared to lose all the money you invest. This is a high-risk investment, and you should not expect to be protected if something goes wrong.
Everybody has different social impact issues that they're passionate about, but most people are passionate about at least one. The only advice I can give: set your standards high, insist on making a difference. This is a space that's booming. There is enough room to do that and still be successful.
If you would do us the great privilege to tell us who you are and what you do for our audience.
Sure. My name's Ariel Wallano. I'm the managing director of Finserv Experts, which is an independent consultancy that provides advisory and delivery services around distributed ledger technology and machine learning. We've worked with some major clients. We led the delivery of a DLT prototype for the Lloyd's of London global insurance market, for HSBC in the area of trade finance and letter of credit origination, and most recently for Deutsche Telekom with their blockchain solution center around go-to-market strategy and product design.
Good stuff. Okay, so we know that you have been involved in a really wide array of kind of blockchain-based services for all kinds of projects. Possibly one of the most experienced people in what's a relatively new space. But we're kind of particularly interested in the tech for good side of things. So I know you've kind of done work in Africa with some kind of micro lending services. Do you want to touch on some of that and
Sure.
And what you've done to help in that space?
No, happy to. So I believe what you're speaking about is a project that I led back in 2014 and 2015, which was using machine learning to implement credit scoring for people and small businesses in East Africa who have no bank account or any kind of financial history that could be used as a credit scoring mechanism. So the way this worked was that Kenya, as you may know, has the most successful global payment system in the world called M-Pesa. Over 40% of the Kenyan GDP flows through it. So it is a major part of the lives of everyday Kenyans. But less than half of Kenyans, adult Kenyans, have bank accounts. The ability to apply for a microloan over M-Pesa has been around for a while, since I think 2011, 2012 timeframe. But initially, in a country of 40 million people, only an average of 200 to 500 loans per day were getting originated because nobody could qualify for that financing because they had no way of assessing their creditworthiness. I was working with IBM at the time, and they asked IBM, would it be possible to use machine learning and look at a person's payment history within M-Pesa and determine whether or not they were creditworthy or what the credit risk was? The answer turns out to have been an unqualified yes. At a level of success that none of us could have predicted. And equally surprising were some of the things that we learned were in fact predictive. So to give you an idea of the order of magnitude of success, before we did this, the number of loans per day originated, as I said, was between 200 and 500. A year afterwards, the number of loans per day that were originated peaked at over 50,000. So this basically made financing available to people and small businesses in a way that just wasn't possible before. There was an article late last year that said in the 5 years that this capability and this algorithm has been around, M-Pesa and its competitors have now originated over 9 million of these microloans. So that's great for M-Pesa, obviously. It's also great for the bank that underwrites them. What's also interesting is that the percentage of non-performing loans actually went down by 26%. So despite growing the number of loans by 3 orders of magnitude, this model outperforms traditional credit scoring. So a truly unbelievable result. So far, that's just about making people money, though. It's important to reflect what the social impact of that is. They did a study in Tanzania, which is the country just south of Kenya, where they looked at emerging microbusiness, which for the purpose of this study, they defined as somebody going from a single person business, think a guy selling food on the street, to getting successful enough where they have 10 employees. Now, over the period of this study, the number of people who emerged by that definition, the number of small businesses that went from 1 to 10 people was 2%. So there's only 2% of all small business operators grew their companies to the point where they had 10 employees. But that 2% drove 25% of all new job creation in the country. So imagine what the impact if by making credit available, you could get that 2% to 3%. So a very small change can have a truly enormous impact on the economy. And if you look at the Kenyan GDP, you can see where that bump is coming from.
Can I ask a question? With this being a new project and not knowing what's going to happen and the fact that no one else had done it and there was no way of looking at credit scores, how did you de-risk the project?
No rocket science. We started with a small group of people. We started with testing historical data to see what kind of results we were going to get. Then we piloted with a small group of people for a period of time, saw what we got, and then scaled it out. This is like I said, that part isn't rocket science. It's just prudent project delivery design. You look at some large IT failures like the rollout of Obamacare in the US, and you realize the problem wasn't that there were bugs, because every new large deployment has bugs. The problem was that they didn't think about how to roll it out cleverly. If you wanted Obamacare to be fantastically successful, what you could have done was roll it out only to 10,000 people and then recruit a small army of support people, so that even if the system was flat on its knees, you had people calling, said, let me take care of that for you. So at the end of the day, the customers would have been delighted, even if with the system on its knees. And that's really the philosophy we applied in terms of the adoption strategy for this. Start with a small group and make sure that small group is really happy.
Which is very similar to what Pynk does, right? By creating Pinksters, by creating ambassadors, cohorts, testing on small numbers, and then scaling up.
Yeah, I mean, it's. I don't know if it would be clear to people that you're using machine learning, artificial intelligence as a key part of this process of understanding the risk and processing all the data, right? And so I've seen you kind of touch on this, that this is a real example of going against this kind of trend, this belief that people have that AI is only going to destroy jobs. And here's a clear case, right, of AI really, really driving jobs growth across the whole nation.
Well, see, I think there's two messages there. AI has the potential to create far many more jobs than it destroys. That's clear just from the numbers of this project alone. If we look what's happened in Kenya and in neighboring Tanzania, the job create, more jobs are created in those countries alone than have been lost to AI so far. That being said, if we think that AI, for instance, will create potentially hundreds of millions of jobs, it's still going to destroy hundreds of thousands. And the fact that these jobs are being created for lots of people doesn't make it any harder for the people who's lost their jobs. We can take an analog of this and look what happened during the dot-com boom. If you look between the advent of the internet and 2016, the number of people in the world living in extreme poverty has gone down by 70%. So that has never happened at any other point in time in history. So this is directly attributable to the internet, and what the internet is doing specifically is it's solving the age-old problem of mobility of labor by bringing the work to people. It's created, the possibility to do technical support in India, to do programming in China, to do, work all over the place. And that's great. So, that kind of change to the world is fantastic. It doesn't make it any better for all of the people who living in mature economies have lost their jobs. It doesn't make it suck any less. And
I think
thinking about it, we certainly created enough wealth in that process that we could have done a better job looking after the people whose lives were disrupted. What I'd like to see is AI move full steam ahead because it can create those jobs, but us to be a little bit more intelligent about looking after the people who are negatively impacted by it, even if it's a smaller number.
And on those lines, it sounds like you've thought about that. What have you got to say?
More than a bit. Well, I think that, the one thing that both established enterprises and startups alike would like from their governments, and I'm particularly thinking about governments in mature economies now, is more investment, is money in the form of direct investment, in the form of tax credit to do the research. It's quite simple. That money and that assistance from the government should come conditional upon companies who are investing in AI strategies to have job disruption plans. Again, it's not rocket science here.
Yeah, I mean, it can be quite scary, right? If you look back at the previous Industrial Revolution, there was riots and almost complete breakdown in societies from the job losses, and it looks like we might be facing even faster kind of disruption now, despite the fact that more jobs are being created. So you would think that our governments would place quite a high importance on avoiding the same kind of thing, but I don't really hear much.
Doubly so because, unlike the Industrial Revolution, unlike even the dot-com boom, because of these tools and because of AI itself, we should be able to do a pretty good job of predicting who's going to be impacted.
Exactly.
So we actually have the ability and the insight to know where to direct the assistance, where to ease this disruption, and we should be proceeding full steam ahead with research and investment, but in lockstep with looking after the people who are going to be disrupted.
Yeah, the very tool that's causing the disruption is the tool that we can use to minimize and avoid that disruption, but it's not being used at the moment.
No, it isn't. I mean, this is why I'm involved. So I'm a member of the parliamentary working group in the UK on blockchain. So I advise UK Parliament on blockchain adoption and regulation. There's a parallel group for AI, and I know several of the people on it. And this is a topic that I think they're tired of me bothering them about because it's something that I'm on about constantly.
Are there any governments that are kind of taking a more proactive approach and open to what you're saying?
Obviously, I'm not intimately familiar with what every country is doing in the way of AI regulation and industry support. But of the handful of countries that I am familiar with, I would actually put the UK at the top. The AI sector deal, the report was released in the beginning of this year, was very forward thinking in its support for ethics and accountability on the part of AI solution developers. And there's not enough there, though, specifically around support for displaced jobs. So comparatively great on an absolute scale in terms of what's needed. There's a lot of work to go. And there's a lot more awareness that needs to be built and a lot more direct support and accountability for job displacement that we need to be thinking about.
It's interesting that you picked the UK out as leading in this, and obviously we are kind of one of the hotspots globally for AI. That can't be a coincidence, right? Is it because it's quite important as a business sector here that more attention's being paid to the potential costs?
It's a good question. I think there's a variety of factors that contribute. The excellence of the universities here is a big part of it. The utter cosmopolitan nature of London as a city, and the fact that it welcomes people from pretty much every culture on the planet is another part. But another key factor, and this is a very rare thing you'll hear people say these days, is the government. When I gave evidence in Parliament in January, one of the things that I said was, I'm going to tell you something that you'll almost never hear, which is you're doing a pretty good job. I think the FCA is really forward thinking as a regulator when you compare it to what the other regulators around the world are doing. And I think that we have the opportunity because of that to be the ones who are first to address these issues. We aren't doing a good enough job yet. As I said, the section on ethics and accountability is pretty good, but there's not enough direct addressing of the job disruption issue. But there's no reason there couldn't be. We just need to keep focused on it.
Okay, so a little bit promising then, at least. So we've focused quite a lot on this kind of AI with the microloans. Do you want to talk about some of the other projects? I know you're working on something in Indonesia with predicting natural disasters and helping to protect people from the impact of those.
Actually, it's not predicting; it's making microinsurance available.
Okay.
The reason poor people around the world haven't been able to get insurance in the past is not necessarily because they're a worse risk. It's because the cost of servicing a $200 or a $2,000 claim is essentially the same as the cost of servicing a $2 million claim. This means that to be able to cover the cost historically of looking after a claim for a small dollar amount would be prohibitive compared to the premium and what somebody could afford. With prices that would certainly appear extortionate. It gets worse in a place like Indonesia, which has 13,000 inhabited islands, because there's very special infrastructure challenges. So let's say you got natural disaster insurance and at a reasonable premium, and a tsunami hit your village, and and your claim was accepted. That's all great. How do they pay the claim? Well, right now, the only way they can do that is to send somebody out in a helicopter with a suitcase full of cash. There's no other way to get the money to these places. Which, again, if you compare the cost of doing that to the cost, relatively small amount of the claims themselves, you understand that insurance companies can't do that and stay in business. So what changes is actually an intersection of emerging technologies. Having a distributed ledger.
I'm sensing a blockchain solution here.
Yep, absolutely. Well done. Well spotted. A distributed ledger allows the policies to be originated and developed by the cooperatives and the credit unions that already exist. So you don't need some massive brutish foreigner invading. You can offer up a platform that everybody can use. It provides transparency for the capital investors, the people providing the capacity. And this has been an issue in the past because it's very easy to be, it hasn't been historically possible to provide, say, a high net worth individual the kind of transparency, which means you have to put your money with a financial advisor and trust them. And well, we've seen what happened with, Ivan Boesky and Bernie Madoff and others when that model doesn't work. But with a distributed ledger, somebody who's, say, putting in £100,000 of investment into insurance capacity could be able to drill down and see, the individual people, businesses, and villages that that their money is supporting and making available in a way that doesn't create the administrative nightmare that a small business like a credit union or a cooperative in Indonesia could ever afford to service. Coupled with that sort of platform is the revolution in mobile money, because now when it comes time to pay the claim, you don't have to send the guy out in the helicopter with the suitcase full of cash. You can fund directly into people's mobile wallet, because if you survive that tsunami at all, one thing is for certain is you will be clutching your mobile phone in your hand as you get tossed about in the waves. I mean, this. So it's a very good mechanism for paying claims. Again, coming back to the blockchain, the other thing that you can do on the claim side is make them parametric, which means in essence that there is no claim. The tsunami hits and you get paid. If your policy was originated in a geographic region that was hit by the tsunami, and we've got plenty of satellite telemetry and we know where those tsunami hits, within a week you get paid. You do not have to file a claim. You're an Indonesian fisherman, you don't know the first thing about filling out insurance forms. Doesn't matter. The tsunami hits, and within
you've got plenty of problems to deal with at that point as well.
And then the product that we're designing is actually bundled to the microlending. So if you take out a loan to renovate your fishing boat, what the insurance policy does is, first of all, it pays off the loan that you've taken out, but it also gives you a year of income protection. So you have the ability within, say, a week of the tsunami is hitting, the money's in your mobile wallet, and you have a year's income, enough to get back on your feet. And this just hasn't been possible in the past. And not because insurance companies are evil, but just because there was no way of delivering that kind of service.
And because most insurance companies are evil.
No, I'm not a long-time insurer. The project that I did with Lloyd's of London was my first foray into insurance. And I have to admit that a lot of my biases were overturned. I had a chance to speak to CEOs of a number of major insurers. And if you ask any of them what their business is, they say it's paying claims. Okay, they want to pay claims. What they want to do is pay claims faster and cheaper. But I saw nothing to evidence or support the public image. What they want to do is to spend less time paying claims, to pay them faster, because the faster they pay it, the less it costs them.
Yeah, make more efficiencies in the processing and all that side of the business, and
oh my God, it's right for it. Let me tell you.
It's so exciting. It's we've seen kind of two examples here. Not over in the UK, we see examples of AI and blockchain making kind of relatively small percentage-wise improvements on businesses, and these kind of small percentage-wise cost savings or profit improvements that actually mean a lot. They could translate into billions because they're such big industries. But what we've looked at here are actually totally transformational things that could change individuals' lives in the examples of people that can create and grow their businesses, but also this insurance project that you're talking about, where it's actually protecting those kind of improvements as well, and preventing it all from going wrong. It's really cool to see this stuff. It must be very rewarding to be able to deal with this kind of project.
It is. It's fantastic. I have a very, very simple methodology about the kind of work I accept. I look for three things in a job, and I will accept any job that ticks two out of the three boxes. The first thing is that it needs to be intellectually interesting. I have to get up in the morning and want to work on it. The second thing is it should make the world a better place. And the third thing is I should make good money doing it. Mm-hmm. I'll typically take anything that ticks two out of the three. So an interesting, high social impact job that I have to do on a volunteer basis, I'll do it. A well-paying, interesting job working for making a company richer, I'll do it. But the best jobs and the ones that stick with me my entire career are the few that tick all three boxes.
Yeah, it's the magic number.
Absolutely.
Well, thanks, Ariel. Is there anything else that you wanted to get across to people watching?
Only to get involved. If you're listening to this podcast, you have pre-selected yourself as somebody with an interest in these topics. There is a huge amount of opportunity to do something, to be commercially successful, and to make a difference. Everybody has different social impact issues that they're passionate about, but most people are passionate about at least one. The only advice I can give: set your standards high, insist on making a difference. This is a space that's booming. There is enough room to do that and still be successful.
That's the vox pop right there for Mike. Just cut, edit, stick that bad boy right in the front. Thank you so much for spending time with us. I love the three things. I think the fact that you've ended it the way you have, given so much hope to something, at least, I'm the man on the street, the whole idea of ML and AI, stealing jobs, destroying jobs, making it difficult, and of course, almost making insurance companies seem like nice people is a hell of a miracle, all to perform in under 30 minutes. So well done. A mitzvah was created on the show today.
Thank you, Ariel. Thank you.
Shalom. Speak to you soon. Take care.
You've been listening to PynkTank, the podcast.